So good evening, students. Good evening to all of you. A very good evening, students. I think students, very quickly, somebody will help to recap of what we discussed in the last particular session, so that now we can proceed further in our discussion. But before I do that, I just need a particular confirmation from all of you. Trinity? Good evening, students. Kanaya? Good evening. So, students, any one of you can recap on what we discussed in the last session very quickly? In the last session, students, as you know, in the PGBP part, first and the foremost point that we all discussed was on the particular classification part. The first and the foremost, students, as you all are aware, was in respect of the classification. We have to properly classify the income into the appropriate heads of income. Why? 5 heads of income, and each head of income has a distinct mode of computation, and therefore students, and therefore an incorrect classification of the income. Therefore, an incorrect classification of the income will result into an incorrect computation of the total income. So if you do an incorrect classification of the income in a wrong head of income, and you know each head of income has a separate mode of computation, we all have discussed last time, like salary, house property, these two heads has standard deduction. Does PGBP have standard deduction? Answer is no. What about capital gains? It's a head full of valuation of full value of consideration, valuation of cost of acquisition. And that is the reason why I told you each head has a separate mode of computation, and hence a wrong classification of income will result into a wrong computation of total income, eventually leading to a wrong computation of tax liability. That was the first and the foremost principle that we learned in the last session. And then we entered in, and I asked you a question then, and the question was, how do we know under which particular head of income? How do we know under which particular head of income that the income has to be classified? What is the answer, students, for that? Quickly, now you need to give me the answer. How do we know that the income would have to be classified in which particular head? What is the test for that? No, rather, in this case, how do we know that any income which I have earned, under which heads of income it will go? What would be the fundamental test for that? What will be the fundamental test that I need to see to understand that, okay, this is what I need to do to classify my income in a particular heads of income, whichever heads. What is the test that needs to be seen? So the answer was the charging section of every heads of income. The charging section of every heads of income. Students, I told you that it lays down the test. It lays down the test on the basis of which the income will have to be classified in the particular heads of income. Do you all agree? Like employer and employee relationship for salary, ownership of house property for house property income. PGBP we already are learning at this point of time. Capital gains, transfer of capital asset will result into chargeability of income under the head capital gains. So therefore, the answer was we have to see the charging section of each heads of income in order to properly classify the income. Properly classify the income in the appropriate head. Do you all agree to this one? And I told you that the first section of every heads of income, The first section, students, of every heads of income is the charging section, isn't it? I told you that in this context. See this particular heading, which you all are in the screen itself. Section 15 to 19 for salary, first section, section 15, the charging section. 20 to 25 for house property, first section, section 20 for house property. 26 to 66, first section, which we are discussing already. 26, the charging section for PGBP. 67 to 91, capital gains, first section. 67 for capital gains, the charging section for capital gains for classification. And similarly for IFOS, 92 to 95, the first section, students, is section 92. Is that point very clear, students? Please tell me, confirm to me first before we proceed further in this context. All of you. Everyone. Any doubt, students? If it is there, please let me know, because as you know, the things, now we are into the entering into the heads of income. Any particular doubt which you have or you may have of the previous class only, yeah, students? Kanaya? All good, Kanaya? Perfect, students? Okay, perfect. So I think I think in that scenario we can proceed further. The first section, students, then the charging section. For the head PGBP we have seen. In this context, let's quickly run through the same. Now, in the last session, students, please have a look to the charging section of PGBP, section 20, section here in section 26, subsection 1 is the charging section. And what does section 26, subsection 1 says? What does section 26, subsection 1 says? See, surprisingly, section 26, subsection 1, the charging section of PGBP says that whatever is the income which is referred in subsection 2, that will be chargeable under the head PGBP. And then what is referred to in subsection 2 that we are reading right now? Now, in the clause A of subsection 2, students, the clause A of subsection 2, what do we get? I have already put something in bracket, profit and gains from business and profession, which is carried on by the SSE at any time during the tax year. At any time during the tax year. This is what is charged. So therefore, in the last session we discussed the charge therefore under this head. The charge therefore under this head is of profit and gains. The charge under this head is of profit and gains. It is, so you cannot say the charge is on sales, the charge is on purchase, the charge is on opening stock, closing stock. No, you can't say that. You have to say the charge is on profit and gains. And therefore, I told you, how do you arrive at the profit and gains, which is subject matter of charge? In the last class, students, we discussed section 276, subsection 1, in which there is a mandate which is given for two heads of income. Which are the two heads of income? Profit and gains from business and profession, and the head IFOS. As per section 276, subsection 1, the income under these two heads has to be determined as per the commercial accounting principle. As per the commercial accounting principle, which is the system of accounting or method of accounting which you generally follow. So the income under these two heads has to be determined as per the commercial accounting principle. So therefore, I get the accounting profit. I get the accounting profit as the base and as the base value. I get what, students? I get the accounting profit as the base value. And on that accounting profit, what I'm supposed to do? Students, on that accounting profit, what I'm supposed to do? Exactly, on that accounting profit, I am supposed to do the adjustments. So on the base value, which is the accounting profit, I will be doing the adjustment from section 26 to section 60. I shall be doing the adjustment. Along with that, I have also written, student, section 278. I'll let you know a bit later. But right now, on the accounting profit, which is the base amount, I will be doing the adjustments, which is under section 26 to section 60. And then I also told you in the last class that you have to do further adjustment in respect of ICDS 1 to ICDS 10. Why is it so? What was the logic I gave you in the last lecture? Because the accounting profit is majorly meant to be reported as per the shareholder norms. The stakeholder happens to be the shareholder for the accounting profit. And therefore, the principle of prudence, the principle of materiality, all these principles becomes pivotal in that case, becomes very important, very critical to be applied in accounting profit. And therefore, you reduce your accounting profit by applying these principles. But as far as the income tax law is concerned, who is the stakeholder for the income tax law? The stakeholder for the income tax law is not the shareholder, but the government. The government wants revenue. And if supposingly you reduce your accounting profit on the basis of prudence, on the basis of materiality, on the basis of mark to market, etc., etc., so therefore the accounting profit will be reduced. If the accounting profit will be reduced, the taxable profit also will be reduced. And accordingly, the tax liability also will be reduced. So therefore, the government said that no, there has to be an equity as far as the income tax law is concerned. And accordingly, what the government did was that they introduced ICDS, Income Competition Disclosure Standard. From ICDS 1 to ICDS 10 is a standard which is there. In the last lecture, we discussed, in fact, two ICDS 1 and ICDS 10. ICDS 1, which is about the accounting policy, very clearly it says, what does it say, students? ICDS 1, very clearly it says that the principle of materiality, the principle of prudence will not be recognized so far as the profit and gains from business and profession is concerned, unless it is recognized in some other ICDS. So unless and until some other ICDS or any express provision of law, if they tell you about prudence, then yes, you have to then take that into account. But accounting policies which involves prudence, which involves materiality, we will not be recognizing the same. That was very clear in that case. So tell me then, in the last lecture, what about the mark to market, students? Mark to market, whether mark to market, will that be made applicable? Answer is no. For the forward contracts, unless there is a specific ICDS which recognize mark to market loss to be considered as deduction. So unless we have got a specific ICDS or specific provision which recognize these losses on the basis of prudence, we will not be allowing the deduction for the same. And on that note, students, in the last lecture, towards the end, we discussed ICDS 10. And what was ICDS 10? Recognition for provision for contingent liability or contingent asset. So when the provision for future liabilities will be allowed to you as deduction, when the provision for future liability will be allowed to you as deduction, the provision for future liability will be allowed to you as deduction if two conditions are fulfilled. Which were the two conditions, students, which we learned? The conditions were if the liability is reasonably certain, and it is capable of being ascertained. Means measurement is possible. If these two conditions are satisfied, we say that the provision for future liabilities will be allowed as deduction in the current tax year. This is what, students, we discussed up till the last lecture, students. This was the thing that we ended the last lecture. So I just did a very quick revision with all of you. And if supposingly, students, you would want me to repeat or clarify any particular point in respect of it, please feel free to ask me that. Rather, anyone, students. If you want speaker also, that is fine, or else you can type it. Any particular part, students, that you would want. Any doubts that you may have, please let me know in this case. Sir, head adjustment from section 26 to 66, like what it is specifying. We will anyways be doing, rather today itself, I will be giving the synopsis of the entire thing. Today we will go through it. But since you have asked, remember in the earlier, remember the old law? Just remember the old law. Right now the section numbers are different, na? But the content would be the same. Remember the old law? Like for example, you get deduction of depreciation in the old law 32. So similarly here also there would be one section for deduction of depreciation. Remember scientific research section 35 was there earlier in the old law. Similarly here also 35 will be there. Remember specified business section 35 AD was there. Here also there would be 35 AD. Remember general deduction section 37 was there. Here also 37. Remember there was some disallowance section which was there, like TDS not deducted, disallowed. Here also you will find some section in this range only on disallowance. In fact, in today's class, now since rather you have asked it, do you want me all to go through quickly those particular section? 5 minutes, shall we go through it quickly? Those sections you are aware. Then we'll come into the charging section. Just out of the curiosity, 5 minutes we'll give students and quickly we'll run through the section sequence, students. And students, very beautifully, I have prepared one thing for all of you, because many students fear, sir, in intra-CA, the list of the section was very high. We know the section, but to remember the section is very difficult. Isn't it, Lakshmi? That is also one of the challenge many students faced. This, and now you have got new act, new section. So again, the challenge would be there. Sir, now the new section also needs to be remembered. As such, you don't have to remember it, but still it is preferable that if you can know the section number. So let me quickly go through for all of you. In fact, this material, this is an important material that would also be mailed to all of you students in this case. This material, students, would also be mailed to all of you in this context. Let me first, very quickly, yeah, students, very quickly, I'll just go through this. 5 minutes time we'll give and see what I've done in this context. Let me go through it. Students, can you see that? Charging section. These are the charging section, students. Now, what in this note, students, I have done, just to refresh your memory, that you should not feel that you are learning something new. On the left-hand side section that you see, on the left-hand side section, students, that you are seeing, this section, students, if you want to take a screenshot also, you can take it, not an issue primarily. But in any case, this material would be mailed to all of you. So on the left-hand side, students, the section that you see, these sections, students, are the new section. These sections are the new section. And on the right hand side, students, I have given the 1961 Act new section, students. Can you see that? Oh, sorry, old section. Old section, students, I have given. So charging section here is 26 that we are discussing right now. Earlier it was 28. Earlier it was 28. Now there was some section 41, students, here. Directly I'll jump to section 41 here. And then earlier it was section 38 here, friends. Earlier it was section 38. Sorry. Right now it is 38. Earlier it was 41. My mistake, students. My mistake. Now it is 38. Earlier it was 41. And students, what I have done is that I have also given module page number for the same, where you are going to find the module page number. So the ICAI module that will be mailed to all of you. Primarily, that module page number is also given to you. Then students, common deductions. Common deduction, students, irrespective of whosoever be the SSC, doesn't matter whether it is a manufacturing company, whether it is a service entity, whether it is a trading concern, doesn't matter whether it is a hotel business, whether it is a particular car company, whether it is a coaching industries, any particular thing. Students, this is what common deduction applicable generally for all the SSC, irrespective of the SSC. So which are the deduction? All the common deduction, students, I have listed on here at one place, so that you are very clear exactly what you're reading. Earlier, students, remember, earlier 3031, rent, rate, taxes, repair, which was there for plant and machinery and for building. Remember those particular things? Those things are now in section 28. Now, in the new section 28, you will find in the old 61 Act, it was in 30 and 31. Module page number is 3.32. Next, students, can you see this? Over here, employee welfare deduction, students. all the employee related. I gave you this as homework, isn't it? I hope that you would have gone through this section 29. Students, section 29 for all the employee related provision, contribution to the superannuation fund, contribution to the gratuity, contribution to the NPS, all those staff welfare fund, students, section 29 in the new act. In the old act, it was section 36 series. All this was section in the old act. And in the module, this is the page number. Why I am giving this old section? Because many of you are filing the return of income of the AY of the last previous year, current AY 26-27. And while you are filing the return of income right now, you people are conversant with the old particular section right now, isn't it? So that is the reason why, to ensure that there is a quick recap or quick linking, that this section will always help. This cross-linking will always help. That, okay, just now I filed the return, and in the return, as per the 1961 Act, I did something about this. The same section in the new Act is this. That is it, students. So, students, same way, section 30, deduction on certain premium, like certain insurance premium. This was the old section, this is a new section. Again, that the relevant page number of the module. Bad debts written off. Students, bad debts written off. Bad debts provision. Old section was this. 31 is a new section. 32, students. Now, old section, students. Remember, other deduction, bonus and commission. I gave you homework, students. Remember, 36A. I told you to go through it. Bonus and commission to the employees. 36A, isn't it? Apart from that, there are other deductions like interest, zero coupon bond. And point number H, students, can you see this family planning expenditure? Remember family planning expenditure? A company which incurs a family planning expenditure for the employee benefit, they get 1/5 deduction of the capital expenditure. Remember that in interest year you would have done it? If you have not done it, in any case, we will quickly run through the same. The family planning expenditure applicable only to company SSC, and if the company SSC incur the expenditure, then revenue expenditure will be allowed in full, capital expenditure allowed 1/5. That is the limit, 1/5 every year. So that is the same thing. In old section, it was covered in 36. In the new, it is in 32. Depreciation, students, old section 32. Remember, add depreciation as per books, less depreciation under section 32. So here now you will write less depreciation under section 33. Now in the new section 33. Now students, can you see there is an additional depreciation? There is an additional depreciation that was available to the SSC. You all are aware. Now students, you know there is a default tax regime. Many of you are aware that under the default tax regime, whether you get additional depreciation allowance, answer is no. So I have already marked for you default tax regime here. Can you see that? For additional depreciation, default tax regime. Keep that in mind. Then general deduction, PGBP, section 37. General deduction, PGBP, section 37. Students, over here, section 34 is a general deduction. See that, isn't it? Now, students, rest of it, actual cost, WDV, the corresponding section has been given that we will be looking at as and when it will come. Now, students, this is about deduction. What about disallowance? I just told you, no, TDS not deducted, disallowed. Remember, 10,000 above 40A, 10,000 above 40A, disallowed cash expenditure. Now it is 36. Earlier it was 40A. TDS not deducted, disallowed 30% or 100% depending upon who is the payee, where the default has been committed. Earlier it was 40 small a provision. Now it is 35. Now it is 35, students. In this case, remember, students, old section 43B, deduction would be allowed in the year in which the payment is made. In the year in which the payment is made, 43B. Now it is 37. Now it is 37. And the corresponding provision of the module has been given. So this is about the common disallowance. Common disallowance means irrespective who is the SSC, we don't care. Manufacturer, trader, service provider, hotel business, anyone. This common disallowance will be there for everyone. Now, students, comes the sectorial provision. This is the important part. See, students, this I will be discussing it as and when it will come into picture. Up till now, students, only up till here, this is the real game. How I have made the interlinking of the things. This I will hit upon one by one. But let us now come back and we will look into the same. So I have done sectorial this thing. Beautifully, this is going to help you revise your PGBP frequently, students. This particular PDF, students, would be very important because through this provision, you will be revising your PGBP n number of times, and please keep revising, students, so that the provision is very well settled down in your mind. I hope that all of you are clear with this one. Shall we now come back with this particular thing? Let's come back, students. Perfect. So just a very quick, students, brother. So you will really be just, students, you have to only keep revising this provision. You yourself will come to know where exactly the things are. If you get stuck, I already gave you the module number. Refer it. Refer it, students. I hope that all of you are clear with this one. Or you can also refer Bare Act, isn't it? Perfect, students. Just a second. Now, students, now let's come back to this. Now, I think we will have to now quickly go through this particular part. Now, students, I shall be discussing now. Okay, I think this part is very clear, students, this particular slide. So this slide will be very much helpful for all of you. Now I come back to our discussion that we are having. So now, students, on this particular part, so profit and gain, students, from now this profit and gain, the charge therefore is on profit and gains. Every one of you are clear with this profit and gains? From any business or profession. Now this is a real game changer, students. From business and profession, students. Students, what do you mean by business or profession? First of all, I'll go through it. See, definition has been given. Students, definition has been given. And the definition of business or profession, students, one has to just refer it one time. Tell me one thing, students. Profession, just as a layman, if I ask you right now, chartered accountancy is a profession. Chartered accountancy, students, is a profession. So, income of a chartered accountant will go under the PGVP. An income of an architect, also a profession, will also go under the head PGBP. Cost accountant, these are the things. A valuer, again it will go under the head PGBP profession. What about a cricketer? What about a cricketer, students? What do you think about it? What about an actor? What about a singer? A musician? Even remember a spiritual particular person? A priest, a spiritual priest. You may be aware of a spiritual priest. Now, they have a people who gather in this and they give a lot of money to this entire, that particular, the priest for the particular gathering, in the gathering itself. Isn't it? So what about the income of a cricketer, income of the actor, or income of these particular spiritual leaders, primarily in this context? Is it a profession? That is a game. Because if you say, no, sir, it is not a profession, then students, the head in which it will be classified would be the head IFOS, actors, musician and all, isn't it? Which head it will then be classified? Then, students, it will go under the head IFOS. What is your take, students, on this particular part? Sir, Srinidhi, this notes would be mailed to all of you. All the students who are already here, I just request to all of you that please be in this, in your, this, what do we say? All the students, ensure that you log in through this thing, so that all the notes which we are having, these notes will be mailed to all of you. Okay, Srinidhi. So definitely all the students who are already logged in, for them these notes would be mailed. Don't worry about that. Srinidhi. So yes, Radha. Yes. So my question, students, remain the same thing right now. Students, my question remain the same thing. What about these particular students? What about these particular income of actors, musicians, and all cricketers? Should I classify their income under the IFOS? Should I classify students their income under the head IFOS? What is your take? Should we students classify their income under their IFOS? Again, you say, sir, it has to go under the profession. But why you say so? Reason? What is the reason for it? Why you're insisting that, sir, it should go under the head? Why you people are insisting to me that, sir, it will go under the head PGBP? You are saying that. Radha says that, sir, no, it has to go under the head profession. What is the reason behind that? Student, the reason is very clear that the definition of profession includes, students, the definition of profession includes, you know what it includes? Vocation. So the definition is in an inclusive manner. Students, the definition is in inclusive manner, and because it is in inclusive manner, it includes vocation. Vocation means what? In the case of vocation, students, people like natural talent. I have got my natural talent. I don't have to qualify an examination to get into Indian cricket team. I don't have to qualify a particular examination to become an actor. In this case, isn't it? So that is something which goes to the natural particular talent. And that is the reason why students see the definition of profession above, students in the blue. Profession has not been defined. The term profession, students, includes vocation. That is how it is defined in inclusive manner. It includes what? Vocation. That is it. CA and all, they will definitely will come. A degree of learning, a degree of training, appearing for examination, qualifying for the examination, and then pursuing the profession. That is a hallmark of a particular profession. Vocation generally is not a profession, but in the definition of vocation, they have included vocation. So therefore, any people through the exercise of their skill, their talent, their you say that somebody say he has got a God gift, spiritual leader. So they are also getting money, and these are the money which they get in the ordinary course of their vocation. They are getting money in the ordinary course of their vocation. So where this money will be chargeable, in which head it will be chargeable? It will be chargeable under the head PGBP. It will be chargeable under the head PGBP. Do you all got this one, students? In this case, that exactly is the point. Now, students, business includes what? Business includes any trade, commerce, or manufacture, or any adventure or concern in the nature of trade, commerce, or manufacture. Students, be careful. Business includes even adventure, students. Business includes even adventure. Just keep that in mind. Adventure, students. But the adventure should also be in the nature of trade, commerce, or manufacture. What do you mean by trade, commerce, or manufacture? Whenever somebody, students, just pay attention to this one. Anyone who is said to be doing a trade, if he is doing the activity in a very systematic activity. If any person is doing the activity in a very systematic manner by applying his skill, labor, and knowledge with a view to earn profit, that person is said to be carrying on business. So a person who is applying, student, just write a particular note. The term business includes trade, commerce, or manufacture. Just students, I'll dictate a note. All of you, just take a note of it quickly. The term business includes trade, commerce, or manufacture. And it also includes adventure, in the nature of trade and commerce. In the nature of trade and commerce. Full stop. Therefore, even students, just write. Therefore, any person who exercise his skill labor, and capital with a profit motive and undertakes the activity in a systematic manner is said to be carrying on business. Is said to be carrying on business. Is that clear to all of you students? Now, students, if you want to write this, what I've highlighted it, please you can take a note of that. This is because of the word adventure. This is because of the word adventure, students. Even a single trade venture may also be treated as business. This is because of which word? Adventure. Okay. So it means that, but please be careful, students. The adventure will be considered as business. Students, adventure will be considered as business only when it is in the nature of, it is pursued in a systematic manner by applying skill, labor, and capital with a view to earn profit. So only when the adventure is undertaken in a systematic manner by applying skill, labor, and capital with a view to earn profit, only then the adventure would be considered as business, isn't it? And in my life, in your life, you people would have done thousands of things which is adventurous. How adventurous you are, isn't it? But is it therefore to be said that you are doing a business? No, because that adventure should be in the nature of trade, commerce, or manufacture. Only then it will be considered to be a business. And when do we consider that it is in the nature of trade, commerce, or business? It will be considered in the nature of trade, commerce, or business if you are undertaking that activity in a systematic manner with a view to earn profit thereon. Systematic with a view to earn profit thereon. Only then the adventure will be said to be a business. Now, if that is the case, students, I'll just give a particular case law which was held, in fact, MP High Court in Suresh Chandra Goyal case. Old judgment, but important principle. A person had a huge plot of land, and he wanted to sell it off. Unfortunately, he could not find a buyer, because obviously there has to be a buyer, no? For such a huge plot, there has to be a buyer. He could not find any buyer. The buyer came, but only for a small piece of land. So what he did then, realizing that he will not be in a position to sell the entire land, what he did was, as per the requirement of the buyer, he started selling the land in plots. After that, eventually, after say a year or so, he sold off the entire land. piece by piece, as per the requirement of the buyer, he sold off the entire land after a few years. Now you tell me, in this particular case, be careful, students, my question is arriving now. Pay attention, my question is arriving now. Kanaya, I'll ask. Yes, Kanaya, yes, very true. My question now it is to all of you. This person who has sold all the piece of land gradually, the income that he got, under which head it will be chargeable? PGBP or capital gains? PGBP or capital gains? Under which head? Now, assessee will say capital gains. Why assessee will say capital gains? Because he wants to take indexation. Although indexation benefit has got some amendments, but just think of the old things. And then there is also a lower rate of tax. Then there is also a lower rate of tax under the capital gains. Assessee will say capital gains. My income should go under the capital gains. Department will say, no, this would be under the PGBP. Why? Because the term business includes adventure. And this is in the nature of adventure. This would be in the nature of adventure. The question therefore is whether the department is right in treating the income as business income or the assessee is right in treating the income as capital gains. Kanaya, Radha, all the students, please express your answers and be very clear, like whatever it is. I just need to know your understanding level at this stage so that we can gradually build up on this. Now, students, I got the answer on this particular part. I will give you one more particular case. Huh? There is a builder. Be careful, students. There is a builder, and builder has got a huge land. And do you know what the builder does? He created a plan for that huge land. And in that plan, he made 3 phases of that land. Phase 1, phase 2, phase 3. In phase 1, he created plots in phase 1, and the plots was meant from middle class family. So he made plots in phase 1 for middle class family, so that people grab the land, they buy the land, and they start residing in that particular place. Then in phase 2, he created commercial establishment, shops, schools, colleges, hospitals. That was in phase 2. And then in phase 3 of the land, he created the plots in that land, phase 3, and it was ultra luxurious plot he created for super rich people. And then he also gradually sold the entire land. He also gradually sold the entire land. This was the builder. He also got the income. This income of the builder, under which head it will go? You will say now, all of you are saying, sir, it will go under the PGBP. And what about the first case? Some students said PGBP, some students said capital gain first case. Do you know what is the difference between the two? In the second case, this person was, the second case, the builder example, don't you think that he was doing a systematic activity? What do you mean by systematic activity? I had a plan in my mind. I had, Kanaya, the plan in my mind in this case, isn't it? The plan was very clear. I made the layout plan. Phase 1, phase 2, phase 3, to whom I'm going to sell. And then I was employing my labor, my skill, my capital. And then I was doing a very systematic activity of selling the plot. I may also be doing advertisement, so on and so forth. So in a very systematic manner, he sold the entire land. Tell me then, in this case, under which head it will go? PGBP. PGBP. In the first case, what happened? Do you think that he was doing a systematic activity in the first case, or he was at the mercy of the buyer? In the first case, was he doing a systematic activity, or he was at the mercy of the buyer? He was at the mercy of the buyer. The buyer came, they said, I want this, take this. Somebody came, I want this, take this. So I was at the mercy of the buyer. So it was an adventure. In the first case, it was an adventure, but there was an absence of systematic activity on his part, and therefore it could not be considered as a trade or a commerce. And because it cannot be considered as a trade or commerce, this adventure cannot become business. And because it cannot become business, in the first case, the income will go under the head capital gains. In the first case, the income will go under the head capital gains. I hope that all of you are clear with this one. In the second case, there was a systematic activity of selling the plots. Systematic activity of selling the plots. And therefore, in the second case, this income will go under which head? PGBP. The adventure, the business was undertaken in a systematic activity, and therefore it is in the nature of trade, it is in the nature of commerce, and accordingly it is a business, and hence it will go under the head PGBP in the second case. So do you know what happened? To summarize, do you know in the first case what happened? In the first case, what happened, students? Do you know what in the first case what happened? The person had a land and it sold that land in plots. And in the second case, the builder sold not the land, the builder sold plots of land. In the first case, the person sold land but in plots. That was his what? That was his, you can say, what in Hindi we say, majburi. That was his compulsion. In the first case, he was not getting the buyer. So in the first case, land was sold in plots. In the second case, what was sold? In the second case, what was sold was plots of land. Not land, but plots of land. So first case, land in plots versus second case, builder, what he sold? Plots of land. Because the idea was very clear in the mind of builder, I want to sell the plots. Did you appreciate this part, students, now? Again, this discussion, not only this discussion is about the definition of business and profession. Yes, the discussion is very much about the business and profession. But through this discussion, one more point, students, emerges, and that is the importance of classification. I hope that all of you are clear with this one, students. Any doubt, students, has been there? Radha? In this case, yes, you could say that. So here, Pranvi, in this particular context, in the first case, the entire land I had, I sold it in plots. In the second case, what I sold? In the second case, students, what I sold? I sold nothing but the plots of land. Fine, students. Kanaiya, Radha, Srinidhi, all of you students, just confirm once. In this context. Clear? So we can proceed further. This is in the case of the definition of business or profession. Not in a literal sense that it is a risky stuff. Adventure means any activity, one-off activity, out of my volition, out of my own discretion, I am doing it. I never had planned for it. I'm just doing it. In this case, even that is an adventure. Okay, so that adventure is very too vast a term. So term business or profession, students, very clear now. Profession includes vocation. Profession includes vocation. Students, but I must tell you one thing, and I think all of you would appreciate one thing. This head is for business as well as for profession. Students, this head is for business as well as for profession. However, some provision are exclusively for business. That provision does not extend to profession. Do you all agree? Or can you give any example based on your inter-CA memory that, sir, this provision was only for business, it was not for profession? In this case, any particular memory of inter-CA that you can recall? Yes, Srinidhi, one particular section, presumptive section, you can easily say, isn't it? Presumptive section was already there. One section of presumptive was for business. Another section of presumptive was for profession. That is a distinction. Apart from that, Kanaiya, what else that you can just tell students in this case, apart from this presumptive section? Any section that you can recall that, sir, this section was only for business and the other section, this section was only for business. It was not extended to profession. Any other thing, students? 35 AD also. Yes, Radha. 35 AD as well. 35 AD specified business, not for profession. Isn't it? Specified business, not for profession. So that was again the provision only for business. One more example I will give you, students. I will give you. You will recall additional depreciation. Remember, students, additional depreciation was only to a manufacturing concern. Was only to manufacturing concern, and manufacture is covered in the definition of business. Manufacture is covered in the definition of business, students, isn't it? And because manufacture is covered in the definition of business, where again additional depreciation is only for business, not for profession. I hope that all of you are clear with this one. What I'm trying to only convey to all of you, do you know what I'm trying to say? You have to just be very careful, students, when you read a provision, that whether the provision is for business or for profession, or it is for both. This is the way you have to read in final CA. In inter CA, you may not have read it in this particular way, but in final CA, be very particular about certain things. This is one among them, students, to know whether this provision is applicable for business, or this provision is applicable for profession, or it is applicable to both. Sometimes, in the case of a business, students, be careful what I'm saying now. Sometimes, in the case of a business, it is applicable only to a particular business. Like just now, Radha said about 35 AD. 35 AD to a specified business, not for all the business. Same is for additional depreciation, only to manufacturing business, not for trading concern. Isn't it? So even sometimes, some provision are curtailed, are restricted only to a particular type of business. It is not extended to all. If you all are clear, students, with this, we can move further. I have done with the definition of business and profession, students. Now I will be moving further, students, with all of you. I hope that every one of you are clear with this one. Radha, Kanaya, Srinidhi, every one of you, quickly, students, confirm. So this is the mindset, very important to now at final CA level. Now, because you will turn up a professional, your mind should act in this particular way. You need to think the law in this particular way. And this is not a difficult thing. It is just the way. Just channelize your thought. Lakshmi? Fine? Perfect. Let's proceed further now. Now, students, so charging section, profit and gains from what? From business or profession. Profit and gains from business and profession. Then, students, carried on by the SSE. Carried on by the SSE. Isn't it? What if, students, if the SSE, is it that the SSE himself should be carrying on the business? Students, please have a look over here. Just a second. Let me come to the charging section. Students, carried on by the SSE. Students, tell me, is it that the SSE himself should carry the business? Supposingly, if the business is carried by his agent, whether the profit will still be chargeable in the hands of the SSE or it will be chargeable in the hands of the agent. Students, whether the profit will be chargeable in the hands of the SSE or it will be chargeable in the hands of the agent. In this case, it will be charged in the hands of the principal SSE, not his agent. Because the supervision and control on that activity was of whom? Was of the principal. And students, be careful. Huh? The principal and agent relationship is very important in principal and agent relationship. In non-resident taxation, students, there would be an exception that you will learn in NR taxation. One exception will come at that particular point of time. But right now, principal and agent. So if a principal is undertaking an activity through his agent, then the profit will be charged in whose hands? The profit will be charged in the hands of the agent, or it will be charged in the hands of the principal? It will be charged in the hands of the principal. Because the agent was undertaking the work on behalf of the principal. Okay, so therefore carried on by the SSE, it does not mean that I myself should be carrying the business. Like employer and employee. Students, employees are the one who are working. but the profit is chargeable in the hands of the employer. Why? Because the employee was not undertaking the work on their own discretion. They were undertaking the work on the supervision and control of the employer. So the profit will be charged in the hands of the employer. So carried on by the SSC, you need to see who was exercising the control over the activity. The person who was exercising the control over the activity is the person in whose hand the profit will be chargeable. Just write, students, one word. The person who was exercising. Please write one sentence. The person who was exercising the control over the activity. The person who was exercising the control over the activity is the one in whose hands the profit will be chargeable. The person who was exercising the control over the activity is the one in whose hands the profit will be chargeable. Is that clear to all of you, students? And the last one, students, this is an important part. Now see, tax year. So students, just link this part. I have just now pay attention, students. The most important discussion now I'm going to have. And through this, you will come to know that 50% of PGBP, effectively you understood the logic behind that. And by understanding the logic behind that, students, 50% of the PGP, then you will see we will be in a position to crack the questions as well. Students, just focus. First word, profit and gains. And the last word, profit and gains for the tax year. What is the tax year right now for your attempt? May 27, November 27. Tax year is 26-27. That is your TY, the tax year. So profit and gains for the tax year. Tax year is 26-27. What is profit and gains for tax year 26-27? That is what it is, isn't it? All of you. Profit and gains for tax year 26-27. That is what is chargeable. What do you mean by profit and gains? Profit and gains would mean the gross receipt from the business and profession. Then there would be expenses would be reduced, and that will give you the profit, isn't it? That will give you the profit in this case. So current tax year receipts minus the current tax year expenditure will fetch me the current tax year profit, which is chargeable. Current tax year, when I say, I mean 26-27. I mean to say 26-27. So the current year receipts, business receipts, minus the current year expenditure, if I reduce, I get what? The current year profits. That current year profit chargeable for the tax year. The current tax year 26-27. Accordingly, now students tell me, in this case, as per the general rule, well, be careful what I'm saying. No, just be careful what I'm saying. As per the general rule, as per the general rule, students, whether the prior period item, will that be allowed to you as a deduction in determining the profit and gains for the current tax year? As per the general rule, profit and gains we require for the tax year. Okay, tax year is 26-27. So, as per the general rule, whether the prior period item, whether that will be allowed to be reduced while arriving at the profit and gains of the current tax year, answer is no. Why? Because this charge is on profit and gains for the tax year. Tax year means 26-27. So 26-27 receipts should be reduced with 26-27 expenditure. That is the general meaning. So that I will get the profit and gains for tax year 26-27. That is what is chargeable. And therefore, the prior period items should not be allowed as deduction or should not be recognized at all. You all get this one, students? Prior period item should not come into play in this case. Students, how many of you have already filed the tax audit report? In the filing stage, tax audit report? In the tax audit report, students, tell me, do you find a particular entry for prior period item specifically? Have you got through this one? An entry for prior period item in the tax audit report. Those who would have filed tax audit report. Clause 21, Abhijit. In this context, isn't it? Why they are asking for that particular tax audit report in that tax audit report prior period item? Why they are requiring that? Because the assessing officer, please understand, the total income, please now recall, come back to the charging section. Section number 4, charging section, total income of tax year. So therefore, total income means of the tax year is 26-27. So if you see, go with the general principle, the current year receipt should only be allowed to adjust with the current year expenditure and losses. That is the general principle. If you are having a prior period item or if you are having a subsequent year item, then that will not be allowed as deduction, because it is nothing but it is going to violate the tax year concept, because I require the profit and gains of the current tax year. So why I should introduce the prior period item? Why I should allow the deduction of a subsequent year item? I should not be doing that. I should not be doing that. In this case, this is the general principle. But now, tell me, students, in PGBP head, now this I want all of you 200% attention. In PGBP head, did you found a section which allowed you deduction of prior period item? Any particular section that you can recall which allowed you the deduction of some prior period item? Tell me any section that allowed the deduction of some prior period item. Radha? Kanaya? Even if it is an old act, it doesn't matter, students. If you can tell me the old act also, Sridhar, I'm also fine with that. Keep saying, students, even though your section reference is right now old, doesn't matter. We will learn the new one every day, 5 minutes, and by that it will get remembered. Don't worry. So, old section, students, old, even though that will be helpful. Indeed, students, see now you people are coming up with that. The one section was, remember this preliminary expenditure deduction 35D? What section was there? Preliminary expenditure deduction, section 35D. And that section deduction was given before the commencement of business. Lakshmi, yes, indeed. That is also one. Preliminary expenditure deduction 35D. Then students, if you recall, I am not forcing you. If you can, those students who can recall, that's fine. Otherwise, just leave it. You will appreciate as we proceed further. Section 35, there was a scientific research allowance. In scientific research allowance also, they have written before the commencement of business, if you have incurred the expenditure, then it will be allowed to you as deduction. They have written it specifically. Now, do you know, students, why they have to write this thing specifically? Because they knew the fact that this expenditure does not relate to the current year. So as per the general charging section, this expenditure cannot be allowed as deduction. This expenditure cannot be allowed as deduction. So if at all the deduction has to be claimed for these expenditure, then if we keep silence, if we don't say anything in the law, the deduction will not be allowed. And therefore, the need was felt. Therefore, the need was felt that we have to write the section in a specific way. And therefore, we found section 35D in place. Deduction of preliminary expenditure. Therefore, we found entries like section 35, the scientific research deduction that we are getting. And now, many of you wrote 43B also, old section. Students, remember, many students say, sir, deduction allowed on payment basis. Write that, you write the reason, no? Deduction allowed on payment basis. Students, this is an incorrect way of pronouncing the section. It is not the correct way, not the proper way. You don't say deduction allowed on payment basis in this case. In this case, like old, that section that you all are quoting, 43B, remember, it was a deduction allowed in the tax year in which the amount is paid. In the previous year, in the tax year in which it was paid. Tax year in which it was paid. This is the point. Say for example, students, indirect tax, GST. GST I did not pay off last 3 years. GST I did not pay off last 3 years. So tell me one thing. Will it be allowed as deduction? Answer is no. GST will not be allowed as deduction. But now in the current tax year, I am making the payment. In the current tax year, I am making the payment. Now you tell me, if the law is silent, if the law does not say anything, then the current year payment which I am doing of GST, I will not be allowed as deduct. I will not be getting the deduction. I will not be getting the deduction, students. Do you all agree? Do you all agree? Why I will not be getting deduction? General principle will come. What is general principle? General principle says that if you don't make general principle says that the chargeability is on profit and gains of the tax year. So current year profit is what is chargeable. Current year receipts minus current year expenditure or losses. That is what has to be considered. So if there is a prior period item, it will not be allowed as deduction. So if I have to get the deduction, students, if I have to get the deduction, how do I get the deduction of a prior period in the current year? How do I get the deduction? By having a specific provision. By having what, students? A specific provision. Do I have a specific provision? Yes. Which section? 43B, old section. New section we'll see in this context. That is the reason why this section becomes important. Let's recall one more thing. Remember, students, if you don't deduct TDS in the current year, 30% will be disallowed or 100% will be disallowed. Do you all agree? TDS not deducted, 30% will be disallowed or 100% will be disallowed. For the TDS default section. If supposingly TDS, remember there's a TDS default, I make the payment and on the payment, students, I failed to deduct the TDS. So 30% was disallowed or 100% disallowed. Isn't it? But if subsequently I paid the TDS to the government, then if subsequently when I made the payment to the government, then whatever was disallowed, will that be allowed to be as a deduction? Whatever was disallowed, will that be allowed to be as deduction? Subsequently, in the subsequent year, whenever I make the payment of TDS to the government, at that point of time, whatever was disallowed earlier, will that be allowed now? Yes, it was allowed now. Again, the same thing which will come into play. That, sir, but in the subsequent year, it is a old deduction. Old deduction means of some earlier year. How you are allowing deduction now? Correct. As per the general principle, it will not be allowed unless you have a specific provision to that effect. Unless what, students? You had a specific provision to that effect. And that is the reason why, students, in the law, you have to have the specific provision for deduction of the prior year items. If you don't have a specific provision for the prior year item, students, you will not be getting deduction at all. Take it from me. And now you appreciate what we meant. What is the profit and gain, students? Now repeat with me. What is the profit and gains? Profit and gains is the net profit as per the books. Students, net profit as per the books. Recall, students, net profit as per the books. and then on that net profit, add adjustment from 26 to 66. From 26 to 66 adjustment. Whether that adjustment, why is it necessary? This is one of the major reasons. Why? As per the general principle, you may not be getting a deduction. As per the general principle, you will not be getting the deduction. So through these sections, that the deduction or disallowances are being made. 60. 26 to 60. 66 is the last section of PGVP. Section 26 to section 60. Now you recall why these sections are important. Because as per the general principle, you may not be getting the deduction. So through a specific provision that the deductions are being given or disallowances are being made. That is the reason for it, students. Okay, just students, can you write a brief note on this? All of you, very quickly. 2 minutes, students, very brief note. Quickly. The charge is on. The charge is on profit and gains. The charge is on profit and gains of the tax year. Of the tax year. In the bracket, right, students? Somebody is this thing on. संकेत जी पता देखिए ना किसका तो ये ऑन है म्यूट कर दीजिए The charge is on profit and gains of the tax year. In the bracket you can write current tax year 26-27. Bracket complete, full stop. Therefore, only the current year, therefore, only the current year, items of revenues should be allowed to be adjusted against the current year items of expenditure or losses. Full stop. The prior period items or the items that relates to future period should not be considered in determining the profit and gains. However, there are certain exceptions. There are certain exceptions to this general principle. Certain exceptions to this general principle. Students, you can just write example. I'm just giving an example. I'm not giving the entire list. Example, section 31. In the bracket, you'll write old section 43B. In the bracket, you'll write old section 43B. Then, students, section 35. Section 35. In the bracket, you can write, students, old section 40 in the bracket small a. And one more section, students, you'll write section 44. Now in the bracket, write old section 35D. Old section 35D, and next to that, write dash preliminary expenditure. Preliminary expenditure. Why, students? Tell me one thing, students. Be careful. This, you should be in a position to answer it, students. The financial year. This is 1st April 2026. 31st March 2027. From 1st of December 2026, the business has commenced. Okay. Here, the person has incurred, students, say E1, E2, and E3. Just take this example. E1, E2, E3. Just take this example. All of you will copy down this example. Now a question. So 3 expenses, E1, E2, and E3. These are the 3 expenses that was been incurred. So students, now then, in this context, students, tell me, students, which particular expenditure will be allowed as deduction? Which particular expenditure, students, out of E1, E2, and E3, which particular expenditure will be allowed as deduction in this case? Have you written this particular example? So now tell me, out of this 3 particular example, 3 expenses, E1, E2, and E3, which particular expenditure will be allowed as deduction? As per the general rule only, we are talking about it. E1, E2, E3. Lakshmi. The Radha has answered. Lakshmi has answered. Quickly, students. Kanaya. Indeed, in this particular context, students, it will be only E3 as per the general principle. Only E3 will be allowed. Why? Because the first tax year in the newly commenced business, students, what is the first tax year in the case of newly commenced business? Section 3. I hope that this particular point has been already addressed. The first tax year in the case of a newly commenced business is not 26-27. 26-27 is not the first tax year. It is the first day in which the business has been commenced up to 31st of March of that financial year. So this is your tax year. This is your tax year. So as per the general principle, students, as per the general principle, you can say general principle only E3. Only E3. And the deduction of E2 and E1. E1. This is section 3. Tax year. This is as per section 3. Isn't it? Tax year as per section 3. All of you agree? This is a tax year as per section 3. Now the deduction general principle as per the, therefore as per general principle only E3. Deduction of E2 and E1 not allowed. But it can be covered only as per 44. Just now I have made you write. What is 44? Deduction of a preliminary expenditure. Only if, you can write only if allowed. Allowed in section 44, students. I hope that every one of you are clear in this context. Every one of you. Because what is preliminary expenditure? Before the commencement of business. So before commencement of business, only 44 can come to your rescue if it is an item which is covered under section 44. Is that clear to all of you, students? Everyone. Now, do you all know, appreciate the logic of section 44? Every one of you, students. In this case, tell me. Now, students, we are done with, in this context, the entire charging section to that effect. Now, students, a humble request from my side to all of you. I gave you 3 sections item. Students, I gave you 3 sections item as an example of this one. 37, which is 43B. What is 43B? 43B will list down the payments like GST, like indirect tax, like bonus and commission, so on and so forth. Interest also you have read 43B, which is now section 37. Also, you could faintly recall the TDS default. TDS default under section 40. TDS default under section 40. Now in the new section, students, tell me, in the new section, earlier it was section 40. Now in the new section, students, what exactly it is? Section 35. Section 35, students. And now for preliminary expenditure, 35D, now it is section 44. Now it is section 44 in this context. So my humble request to all of you would be that from this 3 section, can you just ensure to read as a homework for the next 2 days? Why I am saying so? Because I can then draft the practicals for all of you and directly will jump into the practicals particular part, and you will appreciate this entire nuances. You tell me one thing. You would want to solve the practical questions on this? So will you now read the theory? Now the logic is clear. Because ultimately it is the logic which is the most important thing. Why this section has been created is the most important thing. What is now written is nothing but the illustration. Like in 43B, what you get? Bonus commission, indirect taxes, and some employee related payments. Those are what is written. But why this section was created? Now all of you can appreciate why this section was created. All of you, now you know the purpose of the section. Now you know what is why 35D was created, which is now 44. All of you, if you now know the purpose, why it is created, now students, you should now jump into the application part. So what I'm trying to, in fact, try to do, students, is that I will try to invoke some practical questions directly now on this. But only thing is that you just read primarily these sections and come. It will be really be helpful because I want an answer from your side, students, which is most important, so that I will be in a position to, Lakshmi, I'm telling you, I will be in a position to solve probably on the basis of your understanding in this case. This will be very important. Based on your understanding level, we will be in a position to solve some good questions. Lakshmi, the section I told you, the list, I already gave you the note. No? The list of the section. Which other, Radha? The list of the section is section 44. Other is section. Again, all of you repeat the list of section. From the new act, Lakshmi. Act, those who have not yet got the act, can you just download the act from the website also, Lakshmi? 37, 35 and 44. Just download the act from the website also, incometax.gov.in. Every one of you are clear of this provision, students, the background, why this. See, these things are the ultimate game and we have to invest ourselves into this because now we will be in a position to solve some questions on that. If you all are through, students, any queries are left, tell me on this choice section. Now, do you realize? Now you know through this section, students, why these act has been made, why we are reading the sections now. All the sections, why ICDS we are learning. Now you know why we are learning ICDS, why we have to learn the sections which are covered in this head. I think all of you are now having a clarity of the why of the provision. If you are having a clarity of the why of the provision, my request to all of you would be these small sections, deductions, ensure to do it so that we will be in a position to solve it. Kanaya? Radha? Okay, now you can take a break, students. Before now we go to the next particular session, take a 10 minutes break and then we come back. Perfect. Take a break for 10 minutes. Now, any doubts that you had? So we are done with one of the most important students, the chargeability. And the chargeability students, as you can see, is under that section 26.1 and 26.2a. Any queries, students, that you got it earlier in the break or so? Let me, all of you just put it across at the very outset, because now our discussion would be on other particular aspects. Radha, can you? Lakshmi? Well, students, then let's proceed further. Perfect. So now, students, 26.1, 26.1, 26.2, 2a, we are already through with this. I told you in 26.2a, students, also about the method of accounting, everything we are done. Now, students, from 26.2a onwards and now going further, the other chargeability, students, if you see the other chargeability, in this case, through the act itself. So tell me, herein, the other chargeability, students, how do you remember also? It is an important part. In clause B, subsection 2, clause B, what is chargeable is compensation. What is chargeable, students, is compensation in this context. Compensation, students, say for example, compensation on account of any termination or modification of an agency business, students. I'll just give a small example. Supposingly, a person has been appointed as an agent for pan-India operation for a period of 5 years. A person has been appointed as an agent for a pan-India operation for a period of 5 years. Suddenly what happened was that the principal wanted to modify the terms of the contract, and he said that, look, for South India operation and for East India operation, I want to go with some other agent. So what he does is that after 2 years, he's modifying the contract, and for these two regions, he wanted to appoint some other particular agent. So accordingly, he wants to modify the contract with this existing agent. Now, to modify this contract with this existing agent, obviously, this existing agent has suffered a loss. And because he has suffered a loss, accordingly, whatever is the compensation that was received by this person, the existing agent, that compensation, students, will it be charged under the PGBP? Yes. Is there a specific charge? Yes, there is a specific charge. So therefore, students, these are some specific charge of some amount. Please understand one thing, students, over here. Here you will find in the specific charge. Right now, please tell me, in clause A, what was the amount that was charged? Profit and gains. Was it any specific amount that was charged? No. It was only profit and gains that was charged. Now from clause B onwards, they are targeting specific amount. So these specific amount they are charging in a particular head of income. These are known as specific charging sections. Specific charging sections. Like for example, students, please recall your inter-CA. Lottery winnings or winning from horse race, etc. Under which head it was chargeable? Under which head it was chargeable? Lottery winnings or winning from horse race. Under which head it was chargeable? IFOS. Why is it so? Specific charge. The amount itself was being referred in the charging section as a specific charge under that head. As a specific charge under that head. What about gift? Students, recall the gift provision. Again, IFOS. Why is it so? Specifically, the gift as an amount was specifically charged under the head IFOS. What about dividend? Students, please recall dividend under which head chargeable? IFOS as a specific charge. So dividend as an amount it was specifically made chargeable only under the head IFOS. Same way, now compensation. Now after clause A, up till clause, what was there in clause A? Profit and gains. It was a general charge. So once general charge is over, after that, what you are getting is a specific charge. After the general charge is over, 26(2)(a), which is charge on profit and gains, subsequent item is about specific charge. A specific amount is targeted to be charged under the head PGBP. So what is clause number B? Compensation paid to whom? To any person. What is the reason for payment of compensation? For modification of the agency contract, for termination of agency contract in this case, or for modification or termination of management, etc., etc. That is clause number B. So any person receiving compensation towards modification or termination of agency or for management or for contract, that compensation amount will be charged under the head PGBP. This could be, students, this is in this point number B, thing which is worth to be remembered is clause number 3. Or contract relating to business. So it is not only agency or it is not only to management, just clause number 3 is the only important one. Say for example, there is a particular customer with whom I have done the contract, and as per the contract was for 5 years, that I will supply that particular raw materials to that customer for a period, for a regular period. In case I stop supplying for any reason, I stop supplying the goods to him, as per the terms of the contract, I have to pay him a compensation. Why? Because my goods becomes a raw material for him, so he wants a continuous supply. So 5 years we have an agreement that I will be giving a continuous supply of the goods to him. And if there is any kind of abrupt, like I stop supplying him, then I will have to pay a compensation to him. So he is a recipient, customer will become the recipient. So if he is a recipient, whether this amount, will it be charged to him under the head PGBP? Yes. Why? He is receiving the amount on account of termination of a contract, and therefore, tell me, for him it is relating to his business. Is this a business receipt? Is this a business receipt? Answer is yes. So because it is a business receipt, it will be charged in the hands of the recipient under the head PGBP, specific charge. I hope you're all of you clear with this one. That is point number B. Point number C, students, it is about the government compensation here in this case. Again, it's a compensation payment due or received any person for vesting of management, property or business in the government, including any corporation owned or controlled by the government under any law and affairs. So this is about, students, any compensation in this case received by any person for vesting of management of any property or business in the government, including any corporation in this case. So in this context, students, say for example, a government has taken over my company, and because of that reason, or my property in this context, and because of that reason the government is, and these are my business assets which has now been taken over by the government. Now for that the government has given me the compensation. So in that context, if the government is giving the compensation for taking over of my business asset, whether that compensation, will it be charged under the head PGBP? And the answer is yes. So B and C is all about compensation. Here in the case of B, it is received maybe on account of modification of agency, modification of any contract, or for modification or termination of a contract relating to business. For C, it is all about the compensation received from the government. Compensation received, students, from whom? From the government. That is what point number C is all about. Students, D is, we will discuss this in one concept of mutuality. Over here, only one word is very important, which is specific services. There is a taxation of mutual concern. I think this would have, you would have have gone through this any in the basic concept, taxation of mutual concern or mutuality? This will come somewhere in section in mutual concern in PGP only. At that particular point of time, I will be in a position to give you a clarity on this point number D. Point number D, students. Please come to point number E now. Profit on sale of import license, cash assistance against the export, duty drawback or duty remission or any other export incentive. You may be aware, students, like in foreign trade policy, FTP also, you will learn or you may have learned that there are a lot of export incentives that an exporter receives. And these export incentives mainly are in the form of licenses. So if supposingly the government has given me the license, being an exporter, and I have sold the license, and because of that I have got the profit. Okay, I am an exporter and I have sold those licenses, and because of that I have got the profit. Under which head the profit will be chargeable? PGBP. Why? Specific charge. It will be charged only under this head. Now somebody will think, sir, but I think that it should be charged under the capital gains. Here, students, you will not debate it. Please ensure that you will not debate on this. Just somebody can think that, sir, because license are being sold, license is a capital asset. In interest CA, I have referred somewhere. So therefore, it should be charged under the capital gains. No, students, it is a specific charge. Any specific charge under a particular head, it will be charged only in that head. Only in that head. Like for example, let me tell you, students, a person who earns lottery, who keeps on buying lottery daily, and someday he wins, someday he doesn't win. And daily basis, he is earning lottery. And then there is another person who in his entire lifetime has took only one lottery, and in that lottery he won. Tell me, for both of them, the winning from lottery will be chargeable under which head? Under the head IFOS. Why? Because you don't see the frequency. These things doesn't matter. Why? Because it is specifically charged only under which head? IFOS. Same way over here also, this item is specifically to be charged only under the head PGBP. So please look not at other heads of income. You are not supposed to look into the other heads of income. Is that point clear to all of you? Everyone? So if they say that the profit on export licenses or import license, export incentives, which are in the form of licenses or duty drawback or other incentives, if from that I have earned a profit, this profit would be charged only under the head PGBP. It will not be charged under any other heads. Point number F. Point number F, students. Now, in this context, yes. Why, students, just confirm once. Can I hear? Audio is fine. Yes, Radha. Radha is saying audio is fine. Can I just see once at your end? Okay, now it's fine. So any particular thing that you have missed out, can I hear? Just let me know if you have missed out on any particular aspect or because of any voice issue. But Radha is saying that voice is fine. Lakshmi? Okay. Now, students, let me ask you a question. And in fact, they should also, you should be in a position to. Perfect. Fine. So let me ask you a question, students. Mr. A is an employee of say Reliance. And Reliance has given him motor car. Okay. Reliance Industries. So Reliance Industries has given motor car to Mr. A. You know that, students, now. That motor car will be charged in the hands of Mr. A under the head salary as a perquisite, isn't it? Reliance also have given to its non-executive director who is not an employee of the company, but that director only attends the board meeting. So only attends the board meeting. He is a non-executive director, not an employee of the company. That director only attends the board meeting. That's it. Not an employee. For that director also, because of his technical skills, that Reliance, just to ensure he is well taken care of, that even motor car is given to that director also. Because he is a technical expert. And therefore his board meetings, his presence is in the board meetings are important. So question therefore is that in this case, Mr. B, who is not an employee in this context, I'll come back to this point number D. I'll come back to this one. Okay. So Mr. B, who is not an employee, he is also getting a motor car. This is also perquisite, but he is not an employee. But because he is not an employee, under which head it will be charged? Salary? No. Employer and employer relationship doesn't exist. So under which head it will be charged? Perquisite benefit will be charged in the hands of Mr. B under the head PGBP. Under the head PGBP. This is what, students, this particular point number F is all about. This is what, students, this particular point number F is all about. One more example, students. One more example. LG company has given the sales target to its distributor that those who sell 10,000 units, of say air condition, they will be given a free ticket to Singapore. There is one Mr. dealer or distributor who achieved the sale target of 10,000 in that tax year. So in the hands of the dealer or the distributor, because he achieved that sales target of 10,000, he receives the benefit. What is the benefit that he received? Free ticket to Singapore. So whether the value of the benefit will it be taxable in the hands of this dealer and distributor? Answer is yes. Under which head? PGBP. Because I am in the dealer or distributorship business. So for me it's a business income. So therefore, again point number F. Can you see this point number F, students? Again, by virtue of this point number F, this will be taxable. I hope that all of you are clear with this one. So what is taxable in point number F, students? It is the value of any benefit or perquisite arising from business. So I gave you the example of perquisite. I also gave you the example of benefit. Perquisite, that motor car to that non-employee, and the benefit value of the free tickets. This benefit and the perquisite, did it arise out of business? Answer is yes. Or by exercise of the profession, as the case may be. Or the exercise of the profession, as the case may be. Point number G, students, I think you are aware of this one. You know, remuneration received, interest and remuneration paid by the partnership firm to the partners. They are allowed as deduction in the hands of the firm. They are allowed as deduction in the hands of the firm. Isn't it? Subject to a limit. Subject to a limit, students. Isn't it? Are you aware of that? Now, earlier in the old law, the limit was 40 small b. In the new law, students, the limit is 35e. In the new law, the limit is 35e. So, interest and remuneration which is paid by the firm to its partner was allowed as deduction. Under the old law, 40b. Under the new law, the limit, what is the limit? The limit is in 35e. Now, to the extent whatever is allowed as deduction to the firm, that much of the amount is taxed in the hands of the partners. That much of the amount, students, is taxed in the hands of the partners. How much of the amount is taxed in the hands of the partner? To the extent of the amount which is allowed as deduction in the hands of the firm. That much of the amount is taxed in the hands of the partners. Under which head it will be taxed in the hands of the partner? Under the head PGBP. Is that point clear to all of you, students? Everyone? So it's a zero-sum game. What do you mean by zero sum game? The firm is getting deduction, the profit is getting reduced in the hands of the firm. So the firm pays less tax because the profit is getting reduced. Firm is paying less tax. Whatever is that thing is getting compensated because that much of the amount is now going to be taxed in the hands of whom? In the hands of the partners. The only benefit is that, students, do you know what is a tax planning? The only benefit over here is that the firm does not get the slab rate. It's a flat deduction, 30%. Whereas the same amount now, in that case, the amount which is allowed as deduction, now it goes to in the hands of the partner. In the hands of the partner, an individual, they enjoy the benefit of the slab. And therefore, this is a tax planning. And you would have noticed one thing, students, every partnership firm ensures to exhaust the entire limit. And therefore, if you see the partnership deed, by default, they would have written in their partnership deed. What they've written in the partnership deed? That the salary and the remuneration will be as per what? As per this 40B limit. So they are writing specifically in their partnership deed that the remuneration and interest would be as per the limit because they want to exhaust that limit. Why they want to exhaust that limit? Because the firm will claim full deduction. By claiming a full deduction, the profit get reduced. So therefore, the lower tax would be paid. And now correspondingly, what happens? Correspondingly, students, in the hands of whom? In the hands of the partners. Correspondingly, in the hands of the partners, the same income, now they get the benefit of the slab rate. Is that point clear to all of you, students? Every one of you are clear on this particular thing? Everyone? Radha, can you hear? So this is the tax planning, students. Perfect. Now, students, coming to the next particular part. Here, students, in a simple particular part, in this context, the next particular part, H, simple word, non-compete agreements, payment towards non-compete agreement. If any payment which is made towards non-compete agreement, then the person who receives such lump sum amount as a non-compete agreement. I hope that all of you understand this term, non-compete agreement. I need not explain this term. So any person, if I, as a person, I'm receiving a amount as for a non-competing, then that amount in my hands, in the hands of the recipient, will be chargeable under the head PGBP. Under the head PGBP, students. Now, students, there is one landmark judgment. In fact, in this module only, in the general deduction, in my hands it is taxable, students. In my hand it is taxable. In the hands of the recipient. What about the payer? Whether the payer will get the deduction or not. Because the payer is also making the payment. And there is a landmark judgment in December 2025, which is also covered in your ICAI module. Under the general deduction, PGBP, where it was held that the payer also will qualify for deduction when he is making the payment. When he is computing his PGBP, he will claim a deduction. For him, it is an expenditure. For me, it is an income. For me, it is chargeable. We are talking from my perspective, the recipient perspective. For me, it is chargeable. Then for the payer, for whom it is an expenditure, if he is in business, so whether he can claim the deduction of the payment that he has made, you will learn in general deduction that yes, he can claim through a latest particular judgment that has come. That explanation, I will reserve it for that particular point. We will not mix up. Right now, our discussion is for the recipient, whether the one who has received the amount in his hand, whether the non-compete amount that he receives, will it be allowed as deduction? To that, the answer is yes. Now, students, the next clause number I. Just take a note of it for I, Keyman Insurance Policy, students. Just take a small note. Keyman Insurance Policy, this particular part, it is actually taxable in 3 heads. Keyman insurance policy amount received on maturity, say for example. Now the question is, students, who receives the amount? If it is received by employee, if the maturity amount is received by the employee, then it is tax in the hands of salary. If it is received by employer, if the employer is a beneficiary, then it is PGBP. That is what you're reading right now. 26(2) I. And if it is neither employee nor employer, if it is any other person, then it goes under the head IFRS. Because this amount, this becomes a bit of confusion. That, sir, we have referred Keyman insurance policy. You say it is a specific charge. But why then we find it in salary? It is who has received the amount. On the basis of that, the specific charge is created. It is who has received the amount. On the basis of that, the specific charge is created. If the recipient is employee, the Keyman insurance amount received will be charged under the head salary. If the recipient is the employer, the chargeability will be under the head PGBP. And if it is any other person, the chargeability will go under the head IFOS. I hope that all of you are clear with this one. Every one of you, students, and I hope that you have copied on this one also. Is that clear, students? Why truth? Yes, sir. Now, students, the next one. Students, in your interest CA, I think this you would have already read it. This is fairly a new provision, by the way. Very in capital gain, students, conversion of capital asset into stock and trade. Remember? Conversion of capital asset into stock and trade. That is considered as transfer. Transfer which is chargeable under the head capital gains. Conversion of capital asset into stock and trade. That is considered as a transfer and it is chargeable under the head capital gains. What about a stock in trade getting converted into a capital asset? So my business asset, which is a stock in trade, is getting converted into a capital asset. So if a capital asset is converted into a stock in trade, the charge is under the head capital gains. What if my stock in trade is getting converted into a capital asset where the chargeability will be attracted? The chargeability, students, will be attracted under the head PGBP. It's a reverse, it's a this thing, na? If you see capital asset getting converted into a stock, the charge, even though the charge is all of notional amount, the charge is of a notional thing because the charge is notional charge. Why it is notional charge? Because it is merely a conversion that has taken place. Isn't it? And that is the reason why you would have learned that when the stock in trade is subsequently sold at that point of time, that the chargeability is attracted. So at the time of conversion, it is only a notional charge because I have just converted it. Here, students, be careful under the head PGBP. When you convert an inventory into a capital asset, it may be a notional charge, but the chargeability is attracted. Here, one distinction you have to write, students, because this is where the students get confused big time. Can you just take a note over here? In this case, just write a note. Students, I'll just dictate it quickly, students, in 1 minute. Let's finish off this note. Very important note. A capital asset converted into a stock in trade. A capital asset converted into a stock in trade the chargeability is attracted. The chargeability is attracted under the head. Under the head. Capital gains. Capital asset converted into stock in trade. The chargeability is attracted under the head capital gains. Though the charge is postponed. Postponed means deferred. The charge is postponed or deferred in the year in which the stock in trade is sold. In the year in which the stock in trade is sold. Full stop. Next line, right? A stock in trade or inventory a stock in trade or inventory converted into a capital asset. A capital asset attracts the charge. Attracts the charge under section 26(2). Under section 26(2) in the bracket small j, clause J. Full stop. The charge is attracted in the year of conversion itself. The charge is attracted in the year of conversion itself. In the year of conversion itself. Unlike capital gains, where the charge was postponed or deferred. Unlike in the case of capital gains, where the charge was postponed or deferred. Why students? Students, this is such a great initiative by the ICAI because if supposing you have to revise also, the playlist of every particular class is available. So that playlist always can be, you can revise it at your own speed as well, isn't it? So please revise the things that you would want you to revise it and ensure that in number of this thing, you are probably back in the game. This is such a great initiative. Now coming back students in this particular context. So we are done with this. I hope that this is there. Students, you can just write one last word. Fair market value of inventory. Please write fair market value of the inventory on the date of conversion. On the date of conversion, fair market value of the inventory on the date of conversion is subject matter of charge. Is the subject matter of charge under this head. Fair market value of the inventory on the date of conversion is the subject matter of charge under this head. Why students? Students, point number K again. When we do 35 AD, the old section 35 AD, which you know in this context, at that point of time, we will discuss that 35 AD specified business, this thing. So at that stage, students, we will be discussing this particular part. Okay. At that stage, this right now, you will not be in a position to appreciate it. So at that stage, students, we will be discussing this part. So this is all about the specific charge. So students, tell me quickly, herein, if you have to remember, I'll give you particular this thing, how you revise it, everything, you cannot revise it again and again. Can you just write, students, one particular thing for this one? In clause 26, students, over here, quickly. So clause 26 2A. What was charges? Profit and gains. Or you recall this then? The recall has to be the students. So it was, what was charge was? Profit and gains. Thereafter, if you see 26 2B, also 26 2A. Thereafter, students, if you see the, forget the clause number. Thereafter, if you can recall, compensation. Compensation. On termination of what? The contract of business. Students, just remember, there were 3 items. You only remember 1 item. The contract of business. Just remember this item, students. There were 3 items: management, agency and all. You just remember this item. Compensation on termination or modification of contract of business. So anyone who is receiving. Then the third one, students, this much is sufficient. Government in this context. Compensation, remember, from the government. Just, these are the hint. Government, students. This is a hint. Just remember to the hint. If you can recall, you need not refer it. If you can't recall it, maybe you may have to refer it. Association, students, specific service. Association, in the bracket, specific service. Specific service. These are the, so first one is a general charge. Profit and gains, general charge. Rest of it, specific charge. After that, students, association, specific service. Just this much. This I have not explained, Kanaiya. This I have not explained. I have told that for this, we will do it in taxation of mutual concern. There is one particular section that will come. In that, I will link this charging section with that particular concept. At this stage, you will not appreciate it, so we are not putting that emphasis. Export incentive, students. Export incentive. So this is the next one. Perquisite or benefit. Perquisite or benefit. That also, you'll remember it. Next, students, was partner. Charge in the hands of the partner. What was charge in the hands of the partner? Interest and remuneration, which was paid by the firm to the partners. That amount is charged. And not only paid, what was allowed as deduction to the firm. To the extent it was allowed as deduction to the firm, that much of the amount was charged in the hands of the partner. What about the next one, students? The non-compete. The non-compete agreement, students. That is what is chargeable. Next was keyman. Keyman by whom? By the businessman or the employer. Keyman by whom? By the businessman or the employer, students. And that exactly is the point. After that, students, over here, you have to say in this context, the inventory conversion. After keyman, it was inventory conversion. Inventory conversion. That is the next point. And finally, last one, students, is the asset recovery. You will say, sir, what is asset recovery? The 35 AD, which I have told, which I have postponed it. Which students are postponed it for discussion as and when it will happen. Now, can you easily revise it, students? All the charging section is through. Students, quickly, just tomorrow morning, first thing, right? Doesn't mean we are ending the lecture. At least 1 hour is left more. But my only humble submission for all of you is that, students, have you all been very clear around this? Anyone with full charging section, full effect, students, anything that has been there from the last session up till now, students, just my only submission is that till the time you get a grip of this particular thing, you should keep revising it. All of you, quickly confirm before we proceed further. Radha? Fine, students? Perfect. Lakshmi? So now with this particular point, students, our charging section is over. So now we have settled down that this particular amount will be classified under the head PGBP. Okay. However, there are something they have clarified in the further section. What is clarified in the further section, which is also the charging section? Let's have a look. So up till now, section 26 subsection 1, what it said? It says that it is a charging section. Section 26 subsection 1 said that whatever is the income which is referred in subsection 2 is chargeable under the head PGBP. What is referred in subsection 2? I have given the entire list. Just now I have given you the entire list. So these are the items which are chargeable under the head PGBP. The first clause A is the biggest one. Profit and gains from business and profession. So if you are carrying business and profession, so from that business or from profession, whatever is the sales, receipts, expenditure, etc. As per the method of accounting that you follow, you determine the profits. That profit, you make the adjustment under the Act plus ICDS. This gives you profit and gains. Apart from the profit and gains, there are some further particular specific item which is also chargeable under this particular head. What are the specific items? I've already mentioned as a list to all of you. This is exactly what is the chargeability all about. Now we go to the next particular subsection, students, and please have a look to what is the next subsection of 26. Have a look over here in this context. So over here, students, 26 subsection 3. Can you see that? 26 subsection 3. What it says? It says that where speculative transactions carried on by an SSC are of such nature to constitute a business, the business shall be deemed to be distinct and separate from any other business. Students, please underline the word deemed to be distinct and separate from any other business. This is a very important thing. What do you mean by speculative transaction, students? Any idea behind this? Anyone who can just tell me, what do you mean by speculative transaction? Make an attempt. In inter-CA, have you all have understood this term? Or speculative business? Example, rather you are giving it, okay. Maybe, or an example students will also do, Kanaya. Exactly, yeah. Students, which means that a speculative transaction, exactly, perfect, very good. The speculative transactions are those transactions, students, where the delivery has not taken place. So if there is no delivery that has taken place or in the contract, so if the contract is closed or has been materialized without the actual delivery of the goods, without the actual delivery of the stocks. So without delivery, if the transaction or the contract is concluded, then such transactions or contract is known as speculative transactions. And what they have said in this case, the speculative transaction will be deemed to be distinct from other business. Means it will be deemed to be distinct from a non-speculative business. My question to all of you over here is, students, please pay attention. Can you recall have you done in inter-CA or in your articleship? Is there any exception to this particular speculative transaction or speculation business? Do you know any exception? Exception means that even if there is no delivery that has taken place of the stock, still it is not considered as speculative transaction. Still, it is not considered as speculative transaction. Are you aware of any such exception? Please let me know. Radha? hedging, which means like a forward contract. Okay. Also, students, you would know like derivatives, or derivative futures and options, derivative transactions, isn't it? Perfect, perfect, perfect. Means you are aware of it. Very good, students. Derivative transactions also, you know that although there is no delivery that takes place in the transaction, will it still be considered as a non-speculative? Yes, even though delivery has not taken place, the actual delivery, you don't get the scripts. You don't get the scripts. And therefore, students, in this particular case, will it be considered as non-speculative? Answer is yes, even though there is no delivery. Students, in one of the attempt of the ICAI, worth mentioning to all of you, old attempt, which somewhere in 2017 or 2018, if I can recall, in question number 1, only these people have ICAI has targeted in the examination. One beautiful question they have drafted. Beautiful question that the institute has targeted in the examination. And what was the question, students, over here was, they have said that the profit and loss account of the company, from P&L of the company, was a manufacturing company, was rupees say 100 lakhs. Okay. After the debit, students, after the debit of the following, this was a manufacturing company and the P&L was rupees 100 lakhs after the debit of the following. And one of the debit, students, one of the item of debit was a derivative contract, futures and options that you are saying, derivative contract loss. Derivative contract loss was rupees how much? Say rupees 10 lakhs. This was debited. So this 100 lakhs debit, the 100 lakhs profit was after this debit. Now you tell me one thing. This was a loss. Yes, this was a loss. But tell me one thing. Is it a speculative business loss? Answer is no. Why? Answer is no. It is a non-speculative. Had it been speculative, students, do you know what you have to do? If this would have been speculative, then manufacturing, we know it is a non-speculative. If this would have been speculative, right? I have given you derivative. Supposing in the examination they say it is a speculative business loss, which is already debited. If it is already debited, students, if it is already debited, then you know what you have to do. If a speculative business loss is debited, then what you have to do? You have to remove that add back loss. Why you have to add back that loss? Because this is distinct and this is distinct. And you know, students, in inter-CA you would have learned that a speculative business loss can be set off only against speculative business profit. So this loss has to be carved out, and if it has to be carved out, Kanaiya, very good, it has to be added back. Here it has to be added back. If this question would have been that this loss is a speculative business loss. But what they have given in the question, they have given in the question that one of the debit was derivative contract loss. One of the debit was a derivative contract loss of rupees 10 lakhs. Now you tell me what I have to do. What I have to do? Well, I am going to remove this loss and say that this loss is speculative, so it will not be set off. No. In my notes, I will say no adjustment required, but I have to give an explanation, students. You cannot, just because there is no adjustment, rather, that does not, you have to keep silent. You have to give the reason. And what is the reason? That only speculative losses or speculative transaction is considered as distinct from non-speculative business. However, derivative transaction is an exception to that rule, wherein it is considered as a non-speculative transaction. And because it is a non-speculative transaction, therefore, the loss arising from the derivative transaction, that loss arising from derivative transaction, will it be allowed to be adjusted from the other non-speculative business? Answer is yes. And because it is allowed to be adjusted from the profit of the other non-speculative business, therefore no adjustment is required to be done. So just because students, it is a no adjustment, perfectly fine, but you have to explain this one, students, because this itself will carry some 1 or 2 marks. I am not aware of the marks particular part, but definitely every adjustment in the question, students, carries marks. So just be very careful about it. I hope that all of you are clear with this one, students. Can we proceed further now? This exactly is the point. Now, students, this is an important one. This is a new thing which was not there earlier. Students, can you see that? This is a new thing which was not there earlier. Earlier means in the old law. What was that? Just have a look, students, over here. So, in this context, 26.4 students, 26.4. Don't read the things which is there in yellow box. Only read what is written in the provision. Any income from letting out of a residential house or a part of it by the owner shall not be included in income under subsection 1 and shall be chargeable only under the head income from house property. Income from house property. Students, one, by virtue of this, they have made it clear. What they have made it clear? This is the most important part. If it is a let out of a residential house, then we will not ask any question about the nature of let out, how many property you have let out, frequency of your let out. If it is a residential house property that you have let out, then it will always be chargeable only under the head house property, residential house property. But what about a commercial house property? For that they are silent. This subsection 4 targets only residential house property where it concedes to the head house property. PGBP head concedes to the head house property. What it says that amount residential house property, if it is let out, in this case, it will be charged only under the head house property. In this case, it will not be charged under the head PGBP. But then what about commercial property, friends? What about commercial property? Now, I'll give you an example, students. A person, be careful, students. A person in this case is having a shop and he has given that shop for rent. He has got multiple shops, or he has got a normal office in a building that he has given a rent. That rental income, that is case number 1. Okay. Case number 2. A person is the owner of a building, which is like a call center building or a data center building. You know, some of the buildings has got a lot of sophistication, like they have got meeting rooms, they have got high-speed internet in that building, cafeteria also in that building, in those cases, isn't it? So he has made the entire building in such a way. Meeting rooms are there, or normal office assistants rooms are there, high-speed internet, all the other facilities, cafeteria, everything is there in that building. And that he has given on rent to whom? Why he has made that building? Why he should not make a normal shop? Because he understands that this sort of a let out, if I do, this is not for a normal person. The target will be to whom? To a big corporate house. For them, I'm going to do that. And the big corporate house, if they get a building with all these facility, which is already present in that building, then you can imagine that. In that scenario, the rental amount, the profit motive is there. Why this person? He has got the space. He should make shop and give it on rent. But instead of making a shop, you are making this sort of a building in this context. Another example, malls. When a particular mall owner, students, you just think of it, a particular person who is a mall. Have you just seen how systematically these people make a mall? that in the ground floor they will have, say for example, they will have high-end particular products. Then the first floor, some other like jewelry item. Then the second floor, say they will have all restaurant. And the restaurants also, they will have different varieties. Not only a single variety of restaurant would be occupied. Different varieties. He is letting out what systematically the entire shops. He is not giving that a person. There are some 100 people who wants to start restaurant, and he let out the mall only for restaurants. He doesn't do that. He knows first floor I will do this, second floor I will do this, third floor and fourth floor. He wants to manage the mall. He is why? Because he will choose who he wants to bring in that mall, so that if he can make a very good products in that mall, and then he will have a one theater multiplex also. Why he does that? Because he wants maximum footfall of the people. If there is maximum footfall of the people in the mall, there will be maximum sales of the shopkeepers. If the shopkeepers are doing maximum sales, the shop will be in high demand. If the shop will be in high demand, he will be in a position to increase his rent. So is it a normal shop which has been given on rent? No. The mall is a very systematic activity for the purpose of earning the rent. And therefore, students, when I am just students are giving the shop on rent. Tell me which is the head where the rental income will be chargeable. I'm just giving the shop on rent. Where the rental income will be chargeable? Commercial shop. It will be chargeable under their house property. But in the case of my data center, the corporate building or the mall, that I have given on rent, and I am undertaking a systematic activity. From that rent, tell me where it will be charged. It will be charged under the head PGBP, systematic activity. The same particular land example. Now see how we are getting this thing. Tell me one thing, students. I am just putting this thing. Remember, I told you, just recall, we started the session on that example on the charge of capital gains, on the charge of PGBP and capital gains. Remember that? PGBP and capital gains. For that land, what was for land, for capital gains? We said land was sold in plots. Land was sold. What was sold was huge land, but in plots. Land sold in plots. What about PGBP? Whether the builder was selling the land or he was selling the plots. He was selling the plot. Plots of land was sold. See the difference of the word. See the difference of the words. Isn't it? That is this thing. Now comes the next comparison. This was the first one, students. The comparison between the PGBP and this one. See, this is how you should remember this particular part. Now the second one, students. What is that? The PGBP and house property. In the PGBP and house property, tell me, this person is earning the rental income from shop. So, income from building. In this context, can we say therefore what he is earning is the income from building? Quickly. Income from building, students. So I am earning through that building itself. Income from or shops, isn't it? Here, the emphasis building is not. I am in the case of mall. Can I say simply that I am earning from building or I am earning from shop? No, I am earning not from shop. I am earning through that shop by doing the systematic activity. So income herein through what? through the shop, through the building, by undertaking. What is the main thing here? Undertaking systematic activity. This is a game, students. This is a game. This we are talking about what, students? This we are talking about the commercial building. Commercial building. Commercial house property. You can just write commercial house property. Simple one. So in the case of house property, it was a simple income from building, income from shop. That's it. Then it goes under the head house property. But if your income is not from, it is through the building, but by doing systematic activity. Income through the building by doing systematic activity. So that systematic activity is the game changer. And therefore that will be chargeable under the head PGBP. Is that first example and the last example probably now getting converged? All of you students, so that now it is making sense. Both this thing, now you can recall the classification. These are the real issue, students. And this becomes one of the important part because there are a case law which is in the module also. Chennai Property and Investment Limited, Raj Dadarkar Associate, Supreme Court. These are all Supreme Court judgment. Technically, it looks appear. Then there is an East Hotel, old judgment, very old judgment, East Hotel Supreme Court judgment. The thing is that students after some time they fail to understand what is the difference between these. Difference is this, students. Think of it. Are you earning from the building or you are earning through the building by doing systematic activity? If you are earning only from the building, nothing else, income from house property. If you are earning through the building by engaging further in a systematic activity, income from PGBP. Is that point clear now, students? All of you. Everyone. Ananya, Radha, you have any query? You can just if you can any query, you can just unblock this one. You want to Sanket ji jara in acha you wrote a plot of sale of land and land into plots. Oh yeah, Suresh Chandra Goyal judgment. Perfect. राधा संकेत जी इनका राधा का एक बार वो वॉइस आप ये करेंगे वो राधा का राधा कैन यू स्पीक इट विल बी इजी फॉर मी टू अंडरस्टैंड द क्वेरी अनम्यूट है राधा भी राधा यू आर अनम्यूट सो कैन यू जस्ट स्पीक दैट क्वेरी now you are already unmute or you can just see to do the unmute. Okay, you can't unmute. I'll still try to see plot of sale of land and land into plots. High Court judgment. Fine. If residential property let out, then house property. If commercial property, if earning just the building, then house property. Else it is PGBP, emphasize on systematic activity. Perfect. If commercial property below the residential building is let out, then it is house property PGP. If you see Radha, generally many buildings are there and there is a ground floor which is a shop. Isn't it? You will find many of this thing. Now these are the ordinary shops which are being given like medical shop. Isn't it? There are some other medical shops, and then there are some other grocery shops and etc. Stationaries and all. Now those are the normal shops primarily which has been given on rent. Herein, majorly they sell it, but still, say for example, they are giving on rent in this context. Generally, it is being sold. Generally, the builder sells it, but just for a particular a particular owner has got these things and he has given a shop. So this shop is not an extraordinary. He has not done something extraordinary that he will get a big thing. Unlike in the case where the facility was dominant. What was, in fact, my entire focus was the facilities were getting dominant. The way the let out was done in the mall, that was very dominant. And therefore, a normal shop, only that has been given on a place which has been given on rent. That is it. Nothing which has been, there is this systematic, this thing. So what happens in that scenario? It is a plainly a case of a rental income. A shop given on rent. That's it. Clear in this context? So this is what it is in this regard. Perfect. So that is how it would be. But as I told you, like data center building or a building which has got all the now incubities, and then there's a meeting rooms, co-working space. Now these are the new kind of building. Co-working space are there. Then there are certain high-speed internets which is there in that building, and like cafeteria, etc., etc. And then he has given that entire building on rent to the corporate house. Then it is something he is, why he does so much of this thing. Why he made the building like that? Because he knew that this is in the trend. This is what the corporate require. This is where I'm going to get my maximum rent. Systematic activity. And hence this kind of a rent will be charged under the head PGBP. I hope that now it is very clear to all of you students. Perfect. Perfect. So with that, students, now we are done with the full charging section. Now, students, now also all of you in this context, come back. Students, now you tell me, we are done with full chargeability. Okay. Now, if you see, students, over here, those terms has been given. Now, the next section, students, section 27. See what they have said. Recall house property head, recall salary head, and recall the head capital gains. These head, I told you in the last lecture also that they have got a format of computing the income. These head has got a format of computing the income. These heads have got a format of computing the income. But what about the head house property? What about the head PGBP? What about the head IFOS? Do they have the format like sales minus opening stock, minus purchases, minus operating expenses, trading items, like that they do have? No. They start with, I told you the mandate is 276. They start with a particular base value, and on that base value they do the adjustment. And where is the adjustment, students? The income referred to in section 26 shall be computed as per the provision of 28 to 60 except 58. Means what? This is nothing but the adjustments. 27 is all about, it tells you about adjustments. So this, in under this head, you will have to do the adjustment from this section to this section. That is it. So now all the adjustment will begin. All the adjustment will begin, students. So one by one, students, the adjustment, students, I will give you a particular this thing. And many of the adjustment is very simple, and now you are aware of it. I want to invest now, students, on the practicals part with all of you, with the simple small adjustments. So that while we do practical, we'll revise theory. While we do practical, we revise theory. That would be the best particular approach, students, to really know how to apply the provisions. Now the logics now are clear. Now the big provisions which are there, students, that big provision now we need to hit it very hard in terms of unfolding its mysteries. Mysteries means the logic behind this for the big provisions. But all the small provision directly attack through problems. Now, students, before now we proceed to this adjustments and all, my last particular point, students, just have a look, students. There was, I remember in my notes, I told you about 278. Something about that. Students, can you read this section 278 now? All of you. Please read the section 278. Everyone. from this till this. Have you all read it, students? All of you? Students, now you tell me over here. Overriding recognition rules. Students, in section 26, please pay attention to what I'm saying. In section 26, what you have learned, the charging section, what you have learned is what will be charged. What will be charged? Please pay attention to this one. Huh? This is how you have to read the taxation law. Whether it is PGBP, whether it is capital gains. Capital gains also, this concept. Two things you have to learn. What will be charged? And second is, when it will be charged. What do you mean by when it will be charged? Which tax year it will be charged? What will be charged? Charging section already has given you this details. And what is the second thing? When it will be charged, which means in which tax year this amount will be charged. Because, as I told you, in this case, through some provision, they can change the tax year in which the amount can be charged. They can change the tax year in which the amount can be charged. So when you read the provision, you should also see this aspect also. What will be charged versus when it will be charged. This section 278 tells what? That in respect of item 1, item 2 and item 3, it tells you when it will be charged. Which are the items? Point number 1, interest on compensation or enhanced compensation. Remember, it goes into the IFOs. If you remember some interest year cap, compensation, then interest on that compensation or enhanced compensation, that goes under the IFOs. The question is, in which year it will be charged? And that will be charged, students, in this case, in the year of receipt. And not in the year in which it is accrued. Even if you may be following a mercantile system of accounting, the express provision says it will be charged only in the year in which it is received. That is point number 1. What is point number 2? Claim for price escalation in a contract or export incentives. What does it mean? Claim for price escalation in a contract or export incentives. Just now we have discussed, no? The 26 subsection 2, specific chargeability was there on this. Question therefore is, I will give you 2 years. Which is the year in which the chargeability would be attracted? The year in which, see, I'll tell you one thing. Just through an example, students, try to understand this. See, I am an exporter, primarily, okay? I have exported a goods. So, the moment I export the goods, export incentives, like in the form of import entitlement license. Do you know what is this import entitlement or reduced duty import entitlement? Meaning thereby, if you are an exporter, then through this trade policy of the government, you are eligible now to import the raw materials or other goods at a very concessional price or at a duty-free rate. So that becomes an import entitlement license. Now, therefore, what happens is that question that arises in the mind of people is that, okay, this is a benefit. Yes, it is a benefit. You also know which is the head in which this benefit will be chargeable. There is a specific charge under the head PGBP. We already learned. This benefit, export incentive, there is a specific head in which it will be chargeable. Which is specific head? PGBP. The question that arises over here is, in which previous year it will be charged? The question that will be arises, in which previous year it will be charged? This is the real question. There was a judgment of a Supreme Court, very old judgment, Excel Industry, that you do not remember. Very old judgment, where the Supreme Court has said that this export incentive would be charged in the previous year in which the benefit is realized. Means in which the year in which you have encashed the benefit. You have actually realized the benefit. That is the year in which it will be chargeable. This was the judgment of Supreme Court in Excel Industries. Now, to overrule that judgment, that this particular amendment was made, and in 278 now you find point number 2, and which is the year that they are saying? Which is the year in which the chargeability will be attracted? The chargeability would be the year in which there is a reasonable certainty. So it is not the year of actual realization. It is not the year of actual realization when the charge will be attracted. It is the year in which there is a reasonable certainty that the benefit will be realized. And which is the year in which there is a reasonable certainty? See, the actual year of realization is when actually I get the benefit. Get the benefit means I import my raw material, I don't pay the duty, like that. That is the actual year. When I get the benefit, I don't pay that duty when I import it. That is the actual year of benefit. But what do you mean by reasonable certainty? They have used the word reasonable certainty means when I am exporting the goods, automatically I get the license. The moment I get the license is at that time only. Tell me, students, at that time only, is there a reasonable certainty that I may realize the amount? Yes. Why? Because tomorrow I am also an importer and I import lot of my raw materials at a duty-free rate or at a concessional rate. So when I'm getting the license, that becomes the year when there is a reasonable certainty that tomorrow, whenever I import the raw material, I will be availing this benefit. I will be realizing this benefit. So when I receive the license in that very year, is there a reasonable certainty? Answer is yes. So that becomes the year of charge. You need not wait till the year in which you actually get the benefit by importing your raw material, by not paying the actual customs duty. That year you need not wait, because the year of charge is the year in which there is a reasonable certainty. See the word, and that becomes an important part. What about the third point, students? Which third receipt that they are targeting? Subsidies, grant, cash incentives. That would be charged in the year in which you receive the subsidy. Not that the government has given you the assurance that I will give you the subsidy, why you worry? No. The actual charge will be there in the year in which you receive the subsidy, grant or cash incentives, as the case may be. Actual receipt is the year of taxability. Is that point clear to all of you, students? So do you know what you are reading in 278? You were reading in 278 when the charge will be attracted. Which is the year of charge? Which is the year of charge as far as these three items of receipts are concerned? So what I'm trying to tell you is that when you read the head, you need not only read what is charged or what is allowed as deduction. You also have to read which is the year in which the chargeability will be attracted, which is the year in which the deduction would be claimed. The same concept which I told you, profit and gains for the tax year. So the determination of tax year becomes paramount for the purpose of computing profit and gains, the determination of tax year. So don't you think even this section 278 is in a way determining which should be the tax year for the purpose of chargeability? Answer is yes. Section 278 is in a way determining which is the tax year for chargeability. Is that point clear to all of you, students? Everyone, quickly. Say students quickly. Kanaya. In case of reasonable certainty, obviously government will give in some writing that you will receive. Yes, yes. If that is the assurance, but please understand, Radha, for the case of if you're talking about subsidy, then it is a year of receipt. If you're talking about the export incentive, then definitely the reasonable certainty is what has to be considered. Clear? So can we therefore, students, say, see, when we started off, the theme which we started off and the theme in which we are concluding becomes a critical thing, students. All of you have to appreciate this particular part. It should not so happen that we started on one thing and we went on to another thing, isn't it? So what was the situation of the tax year? The concept of tax year, students, therefore becomes of paramount importance. The concept of tax year becomes of paramount importance. And accordingly, students, in this context, the profit and gains of the tax year, as I have told you, the profit and gains of the tax year. Now, students, in the list, I gave you some example in the list. Which was the example that you've written? That because of the specific provision, previous year, the prior period items and all. So can you also in that put an asterisk over there? And just can you put somewhere in your notebook above that particular point where I was giving you that note? In that you have written some 3 sections in this case. So my only submission is that in that area only put an asterisk. Let us come, Kanaya, next class when we come to that, definitely I'll explain, don't worry. When we do that 29 deduction that you're talking about it, any case that deduction, we are going to do it. So that time of deduction, definitely I'll be explaining, don't worry much on that. So students, in that particular thing, the next class would be on this practical only. In that case, I'll address your 29th query, section 29. But just come to this one, students. The 3 section that you've written today on that tax year, I gave you 3 examples. So over there somewhere, can you put an asterisk and also put it just above in your notes? Just write in that notes, students. In the notes itself, you'll write on the tax year. Also, section 278, just please request you to take in your notes. Also, section 278. Determines the year, the tax year of certain income, in which the charge is materialized. Full stop. Now, a thumb rule, students. Just please write somewhere which is very prominent for your revision. Please write somewhere which is very prominent for revision. Therefore, it is not only about, please write. Therefore, it is not only about what is charged. It is not only about what is charged or what is allowed as deduction or what is allowed as deduction, but it is also about when it is charged, or what is the tax year of deduction. that governs the computation of total income. That governs the computation of total income under the Act. Computation of total income under the Act. For the tax year. Computation of total income under the Act for the tax year. Full stop. This is the closure, students, in this context. So it is not about what is charged, but also when it is charged. That determines the total income of the tax year. Is that clear to all of you, students? Now, students, quickly, two things. Today, I have mailed it, the question. I think you will be getting the mail of the question also tomorrow or so. But I will request you, can you just take a screenshot, students, if it is possible? I have already drafted the question of that homework of the employee-related exercise. Just see how much you can do it, students. In this case, just see how much you can do it. For the employee-related exercise, I have drafted a question. All of you just have a look, see how much you can just do it in this context. I'll just share you, if you can just take a screenshot of the same. See here. Just can you take a screenshot first? Just a second. Yeah. This question in any case will be mailed, but maybe you'll get mailed by tomorrow evening or so. So it's better that if you can just go through this and same section 29. I'll just mark, students, which point that you just refer it. You may refer it from the ICAI module or from the Act directly, doesn't matter. Students, this entire thing, the question also goes to additional information up till this. Okay. This is the additional information. Just do up to this. Students, do whatever the best that you can do. Fine. Whatever the best that you can do by reading section 29. I'll just give a particular this thing, which section that you will refer it. For this particular exercise, students, which section? From Bear, students, just download it and just refer that few sections already I've told you and just try to make a sense. I just want your working. Students, even though you made the mistake, perfectly fine, but make a honest try. The only particular request to all of you is that just make a honest try from this particular exercise. And if I may just try to give you the list of the section, students, in this context. Just a second. So here, just a second, students. Students, any case, you have already, students, just come back to this one in the common deduction particular part. Over here, section 29. This already you are doing it, isn't it? That is one thing that you are already doing it, students, in this context. So that is particular point number one. Other than that, students, over here, in this particular context, you can just try to refer, students, over here, section 37 also, students, section 37. Bonus and commission and all are covered over here. Section 37. Students, please take a note of it. Section 29 for employee related. And what is the general deduction? Student, general deduction is section 37. General deduction is section 37. Sorry, section 37 is for what was 43B. See, this is the mix-up that even we people encounter, because for the last 20 years I'm teaching this subject, so therefore this mix-up always happens. Earlier, old law 37 was general deduction, but now we are not talking about general deduction. 37 in the new act, in the old act it was 43B. What is 43B? On payment basis, that what you people learned today that we discussed. So, section 29, section 37, in this case, and students, the simple sections at least you can do, like 36 also, students, you can read. Students, 36 also, students, you can read. It's a simple one. That is not that you don't know, you already knew. These were some of your favorite section of your inter-CA. So please run through this, and I will in fact, students, see you then in the next particular class. You just let me know if there are any query which is there on the today's class. So 29, 37 and 36 is what I want all of you to go through it. That 2-page screenshot you would have taken. Please make an attempt. Whatever the best that you can do, students. Let us in fact have this, expose yourself fully. This is the best thing that you will do and you get the best opportunity. And then in the next class, I'm going to solve that question with all of you. But one attempt has to be yours, students. One attempt, students, has to be yours. Is that clear, students? Fine. And we have now I have given you how to remember each and everything. Conceptually, I have made you understand. And I have also given you how to remember the charge from profit and gains till the end. Any other query, students, now you have, please let me know. That irrevocable trust, Kanaya, next class, because that is section 29. So let me come to section 29 and then I'll trigger that discussion with you. Students, quickly, let me know any queries. So what happens, students, is that now every class I will give you some practicals that you will have to look into it, so that you make one attempt of practicals, and then we will, in the next class, we will also be solving together that thing. So you have a good grip of how to apply the difficult provision or the total income question in the examination. Is that clear to all of you, students? Perfect. Any particular doubt, students, that you may have? Specific service, Radha, by the way, I have not yet explained it. You are talking about the special mutual concern for the specific service which is our. I have not explained it, but since you have asked it, let me give an example. Like for example, students over here, a stock exchange is a mutual concern. In the stock exchange, what happens? You have got the members. Who are the members? Stockbrokers are the members. Now, stock exchange provide to the stockbroker, who are the member, common services, for which they are charging membership fees, annual membership fees. Now, that annual membership fee is given by the members to the stock exchange. Stock exchange uses for the betterment or for the welfare of the members. So, it's a mutual concern. So, whatever is a surplus arising from this mutual activity, can the surplus be considered as an income? Answer is no. Why? Because this I contributed for my benefit primarily. So whatever is a surplus from this mutual activity, this surplus at the end of it, whatever is a surplus of the stock exchange is not taxable, because it is not an income. Surplus is not an income. I give you one more example quickly to make you understand this basic concept. So say for example, students, like you decide to go for picnic. 10 people, 10 of you are there who decide to go for picnic. Every one of you have contributed 1,000 rupees. So in all, 10 people, 10,000 rupees. Then 10,000 rupees you have given to your, say, the senior most person in the group. He organizes everything. Out of the 10,000 rupees, he organizes everything. The senior most friend of yours in the group. Now, out of this 10,000, say for example, 8,000 rupees was spent in that picnic, in that day trip. So, balance left is how much? 2,000. That is a surplus that is left out. Even after every event of the picnic is done, 2,000 is still left out. Whether that 2,000, can we say it is an income? Answer is no. It belonged to whom? To all the 10 people. So that 2000, which is a surplus, cannot be considered as an income. That surplus is not an income. Now, yeah, Nidhi or chit fund. That is the thing. Now, let me give you that specific service example. Coming back to stock exchange only, the real example. Supposedly, one of the stockbroker, he approaches the stock exchange and he tells stock exchange that I want surveillance on one of my broker. I want surveillance on one of my sub-broker. So a stockbroker has got multiple sub-brokers. So he is approaching stock exchange and he is requesting stock exchange that I want surveillance on my sub-brokers. Whether they are working for me or they are working for someone else. Stock exchange accordingly put a surveillance on their sub-brokers. But they say that we will charge you a fee. This is a special activity. This is a special service. We don't give surveillance to everyone. So you have asked for it. We are giving it to you, but that would be for fee. Now you tell me, is this a specific service or it is a mutual for all? No, it is a specific service for a member. And because it is a specific service for a member, the amount which is charged, will it be now considered as income? The amount which is charged, will this be considered as income? Answer is yes. Under which head it will be charged? PGBP. Which is the section? Section 26 2D. Which is the section? Section 26 2D. So in my earlier case, surplus in a mutual concern, the old example, picnic example, 2000 surplus, that was not an income. And therefore, there was no question of chargeability. But in this particular example, on the specific service, whatever is the amount which is charged, that amount which is charged, is it an income now? Yes. Now, under which head it is chargeable? By virtue of a specific charge. Under section 26, subsection 2, clause number D, it is specifically charged under the head PGBP. And that exactly is the game. By good that now you have asked this, by default, I have explained even that particular chargeability, which leaves us only to the last, that 35 AD charge, specific charge, which I'll explain in the time when it will come. Perfect. Exactly. Yeah. Perfect, Radha. I hope that now all of you are clear with this one. Every one of you. So students, my only humble request to all of you would be just, even though you may be a bit tired, students, these are very important sessions, students, because by virtue of this, your total income, question number 1, which is there, it is going to get tested. We are hitting now to your total income. So whatever is the flaws that is there in you, that flaws needs to be get exposed. And the best way to expose the flaw would be you people only trying get yourself into that solving exercise. First, even though you may be a bit tired because of the hectic schedule in 31st July, but just if you can just take some time out of half an hour or so, read the provision through the Act or through the ICAI module, what has been mailed to you, read it and just see what the best that you can do. It is not that you are reading it for the first time. In literacy also you have done it. I'm just giving those provisions that you are a bit comfortable based on your literacy in this thing. So that we will be in a position to attack these particular provision directly in the next class through that practical solving. At that time also we will have the opportunity to come back to the provision. Don't worry. I'll explain you primarily towards the end, like the way I've explained you mutual concern, I'll explain you those each and every provision also towards the end. But my only submission is that your first attempt is the most important attempt, students. Because each student has got an individual and distinct flaw. Nobody is perfect. Primarily, even I'm not perfect in that scenario. So everyone has its own unique and distinct flaw, and we just need to overcome or correct those particular flaw. This is not uniform. This is not universal. This is very much personal and which is very much individual to each individual, and that is what we need to overcome. That frailty, that limitation that we may have, maybe from very beginning. So students, it's your turn. Give your best shot, students. Final CA, first attempt. We have to ensure and you have to make all what it takes to clear the exam. Okay? Perfect, students. Let's see. I'll see you then, students, in the next class. Okay, give your best shot. Good night to all of you. Take care. Yeah. Any query? Thank you, Rana. Good night, good night. ठीक है संकट जी, बंद कर देते हैं.
Recording stopped.